Okay, now we are live and good afternoon. Thank you, Shane, again for facilitating this recording. And thank you, Ricardo, for being here with us. We have been sharing some of our knowledge with the audience, and there's a lot of questions from the audience in regards to taxes. So we have an expert, Ricardo Gonzalez, has been our accountant for, how long, Ricardo? 6 years, 5, 6 years?
Years, yes.
Yeah. So it's been a lot of knowledge that I have now, thanks to you, and it's a great way for us to be in business because at the end of the day, it's not how much you make, but how much you keep. So you have been key for us to be able to get our business up and running, and I wanted to show my appreciation and thank you for everything you do. And I appreciate that you put together this presentation for our audience. So let's go ahead and get started. It's a lot of good information here.
Yeah. Okay. Thank you, Shane. Thank you, Diego, for allowing the nonprofit organization Knowledge for Good Inc. to be able to make this presentation for educating your audience members on the benefits or some of the common questions that might arise on this type of partnership that you guys are talking about, right? So, what sort of deductions or tax benefits can someone utilize if they plan to start a business and have expenses but no income yet? That's the first question. The answer is it depends, right? So in general, the tax law allows for any expense necessary and customary as an expense, right? So if I was to make a list, it would take forever to go through this, right? So I don't want to bore you through everything that could be necessary or allowed as an expense, right? So the law allows you all of this. So it actually depends on the type of business you're actually doing too, right? So if I'm doing a business as a beautician, my expenses are going to be different than if I am doing a construction business, right? As a beautician, maybe I can, put scissors and beauty products, hair products, skin products. But if I'm my construction business, I try to list those same expenses. It's not going to fly, right? It doesn't make sense for you as a construction company to deduct beauty expenses, right? Because that's not the type of business you're in. So it has to make sense with your business. Uh, there is no income necessary to claim the expenses as long as you can show that you are trying to make money, right? Why? Why is that important? Well, because of the habit classification. The IRS expects your business to have net income 3 out of every 5 years. Otherwise, if you don't do that, they're going to classify you as a hobby, not as a business. So what's so bad about being a hobby? Well, as a hobby, you can only deduct your expenses up to the income that you generate, right? So if I have no income, then I can claim no expenses, right? So that's why it's so important to be to not be classified as a hobby instead of as a business. As we go along with the next questions, I think it'll make more sense of what it would be or what makes sense for you to show that you're trying to make money as a business. Okay. The next question, should the business owner from an LLC before generating income and still in the startup phase? Okay, so again, the answer is it depends, right? One of the basic principles of accounting is the cost benefit analysis. Meaning, if I'm going to be selling pens, right? So I have a pen, I want to sell it, right? If it costs me 10 cents to buy it, and I can only sell it for 5 cents, is it a worthwhile business? No, right? It costs me more than the benefit it is producing, right? So I always have to make that analysis, right? When I'm making a business decision. Is the cost that is going to do that for that expense the benefit is going to be more than that, right? Now that it's not as a simple as like what I just mentioned. But what if yeah, it takes me 5 cents to I'm sorry, it takes me 10 cents to buy it, and I can only sell it for 5 cents. But what if I'm selling it with the notebook, right? And the notebook costs me $10, but I sell it for $15. But in order to be able to sell the notebook, I have to sell the pen.
Mhm.
Then
And now you have some profit.
even though the cost benefit analysis of the pen by itself, it would make no sense to sell the pen. But if I'm selling them together, right now, pen and book, then it might make sense now to actually have that expense taking place. So it's not always as simple as just considering the product itself, but you have to consider everything related to that expense to make sure that it is actually bringing you more benefit than what it's costing you, right?
So
So going along with
on
the
that,
NLC, go ahead. Yes.
I think if I understand, just selling the pen, you're gonna be at a loss. But putting the pen together with the book, now you have profit, and you have to show the IRS that you have the intent to make profit. Correct?
Correct, right. And that's what you're looking for too, right? Are you just doing this for fun as a hobby? Or are you
Right.
actually trying to make a buck? That would be a
So
business.
to make this for our audience, I want to make this like a good example. We have people in our group that are driving around looking for properties, looking for mobile home parks or single mobile home units or RVs. So the gas money they're spending going around the neighborhood, that can be deductible, right? And because they can, even if they're not making money, but at the time they find a property and they make some profit on that sale, they can have a write-off based on the gas money they spend to get to that property. Correct?
So actually, that's one of the you showed one of the toughest things to analyze. Gas expenses versus standard mileage. So actual expenses versus standard mileage versus depreciation, right? So when you're using a vehicle, there's a lot of variance on how you can actually write off that expense. If we want to make it simple, yes, I mean, if potentially there's an expense, not necessarily the gas that you're using or not necessarily the mileage, but yeah, there will be an expense related to that looking for that property in your vehicle that will be deductible. How much? It depends on which method of accounting for that expense that you're going to be using for. But yes.
Okay. I didn't want to make it too complicated, Ricardo, but I just wanted to show that if you have the intent to make a money, the IRS say that you are in business and it's not a hobby.
That is correct. And how do you prove intent, right? So you have to make money. And again, the way they look at it is you have to have net income, not just gross income. You have to have net income 3 out of every 5 years, right? Now, one of the things that's going to allow you to show that you actually are serious about making money is creating an LLC.
Okay.
Because why would anybody do a hobby under an LLC? They wouldn't, right? So creating an LLC is going to cost you money. You're going to have to pay for an attorney. You're going to have to pay the Secretary of State fees. You're going to have to pay the business license fees. So yes, creating a business does show the intent that you're trying to do this as a business. So in that way, right, if you're trying to avoid having to be classified as a hobby, then yes, having an LLC from the start is going to help you do that. Provide evidence that you're doing this as a business, not as a hobby,
Okay.
right? Now, are you trying to capture startup costs, right? So you just mentioned a very good example, Diego, right? So you could have a lot of expenses before you actually make a buck. It could be 2 or 3 years, 5 years, 7 years, 10 years before you actually make any, right? After you start carrying out expenses. Those are called startup costs, right? So if you know that for years you're gonna be having to carry these expenses, and then you know that eventually you're gonna be last harvesting. So what does last harvesting mean? It means you're making money in other ways, right? So maybe you have good stock investments, crypto investments, a good W-2 salary, right? And you want to be able to offset that income with the losses that you're having from previous years of trying to start this business. So if you're trying to do that, then an LLC may not be the best option, right? A C corporation, a true C corporation will be a good option, right? So if this is your plan, your game is going to be carrying those expenses for many years and then eventually being able to harvest those losses against your personal income, then again, an LLC will not be a good choice for you. It's better for you to set it up as a C corp. Okay. Now, another thing to consider, if you're starting the business and it qualifies as a nonprofit activity, then an LLC is not a good option either. Okay, you should start it as a nonprofit organization, not as an LLC, right? But yes, what if you have no income? You have no W-2 here or anywhere in the world. You have no assets, right, here or anywhere in the world. Then does it, for asset protection purposes, does it make sense to have an LLC? No, it doesn't. You have nothing to protect, so why would you want to start the business as an LLC? It gives you no benefit to start the business as an LLC. But now, if you do, even if you have no assets, but you have a good income, a good W-2, or good investment income, or good crypto income, right? Then you might want to start it as an LLC to be able to protect anybody from attaching to those sources of income or those assets, right? So that's why it's always, again, cost benefit analysis. Shane, do you have any questions?
I don't think so. It's definitely, it's great info. I think, one thing I was thinking, I think about is the aspect of, just when someone does a personal income, you said that it can be used. I'm sorry, not personal income. When you said there's business income, sorry, my voice is a little foggy today, that it can be the income that's in the future, just so we can clarify for the viewers, it can be used for prior expenses, correct?
Correct. So it could be, that is correct. And if you're planning to do that as a loss harvesting strategy,
Awesome.
then instead of forming an LLC, it would be better for you to do a C corporation, a true corporation. By doing that, let's say you have 7 years of expenses, right? Trying to build up this business, and then it fails, right? You started on year 8, year 9, you realize it failed. Now, if you have it in a C corporation, you can actually use these expenses to offset your future income. If you have it on an LLC, you will not be able to do that.
And does C Corp stand for anything?
So C Corp is that traditional corporation that we think of. The other option is a small corporation, or what's called an S corporation.
Okay.
S corporations, an LLC can be taxed as a C corporation, as an S corporation, as a partnership, or as a sole proprietorship. However, as an LLC, you cannot dissolve the LLC and then have those expenses, even if it was taxed as a C corporation, you can have those expenses over the years be carried forward to your personal tax return. Okay. As a C corporation, you are able to do that. So that's why I was saying, if you have in mind that you want to do this, right? This is a risky proposition. You're not sure if it's going to really want to work. And you know that over the years, you're going to be building all these startup expenses, these startup costs. And you want to be able to take it to your personal tax return. If it fails, then an LLC might not be the best option.
Sure. Okay, yeah, I think those are the 2 questions I had.
Perfect. Thank you. The next question, should someone form an LLC in the state they reside or plan to do business in? Again, the question is, it depends.
Yeah.
Right? So again, if they're going to be capturing startup costs for years back then and then do the loss harvesting, then no, an LLC is not a good idea. If their business is located in California or Tennessee, a corporation might be a better idea than an LLC for California residents, right? So there is a gross income California tax on LLCs.
Wow, okay.
Yes. So if you have a California entity, yeah, and you know it's gonna be making over $250,000 gross income per year, you may want to do that at a corporation, not an LLC.
Wow.
Okay. If you're in Tennessee, all entities, LLCs, corporations, have to pay an additional tax, right? So if you want to avoid that, then it might be better to actually have a Wyoming LLC taxed, and then that Wyoming LLC registers to do business through a trust in Tennessee, so that you don't have to pay the additional taxes in Tennessee, right?
Is there
And
any
again,
reason?
as benefits analysis, these are general rules. You have to look at your specific scenario, run the numbers, and see if it would be better one way or the other, even in California or Tennessee.
Sure. Any reason why Wyoming particularly?
Well, Wyoming is so in most states, right? So 47 out of the 50 states, LLCs only give you inside protection. Okay, so what that means is if you have assets inside the LLC or income inside the LLC and somebody sues you, they can only get whatever is inside of the LLC. They cannot go after anything that is outside. So if you have your W-2 income or any other assets that's outside of the LLC, they cannot grab it, right? So that's what you would think, but that's actually only for things that happen inside the LLC.
Okay.
So if you have outside protection, meaning you're in a car driving happily, right? The guy in front of you stops all of a sudden, you don't have time enough to brake. Now you run into the guy's an old doctor, so they make a lot of money, and now he dies right on the scene. Even if you have the LLC, they can actually grab the LLC and take it away from you.
Okay.
As outside protection. So most states don't offer that outside protection. Only 3 states offer outside protection: Delaware, Nevada, and Wyoming.
Okay.
Okay. So why Wyoming instead of Delaware or Nevada? Well, Nevada is more expensive. Nevada offers no anonymity. So if you're looking for a little more, nobody knows my business, then Delaware or Wyoming would be better options.
Mhm.
And then Delaware has income tax.
Mhm.
Wyoming doesn't. So yeah, that's why I would choose Wyoming.
Sounds yeah.
Cheaper, more protection, more anonymity. So yep, I would choose Wyoming.
Okay.
And again, it's not how much you make, but how much you keep. So the less taxes and the less expenses, the more money you keep.
Correct. Okay, the last question. What if someone realizes they have expenses they didn't account for in a prior tax year? What's the answer? You probably know it by now. It depends. So you have to do a cost benefits analysis for these two, because yeah, you can do an amendment, right? But if you do an amendment and the benefit is not more than the cost, then you shouldn't do it, right? So if you have a $100,000 expense that you forgot, right, and you have a 20% tax on it, right? So that's gonna be $2,000, $20,000. Then yeah, that makes sense, right? Okay, even if the uh, amendment cost, the CPA, the tax preparer that's doing this for you, is gonna charge you $30,000 for the amendment, then no, right? You say no, that doesn't make sense. Why would I do that? So that's why it depends. You have to run the numbers, see if it actually makes sense for you to do that amendment.
Okay.
Now, again, like with the pencil, right? You have to look at everything around it. So what if by not doing that amendment in that year, let's say it was 2 or 3 years ago, now for the next following 5 years, I'm not going to be able to take an expense or a deduction. Right, so then it might be a good idea, even if I'm losing money by doing the amendment for 30,000, so that I can claim those expenses or deductions for the following years. So again, it depends, right? The answer is it depends. You have to look at all the information before you make a good business decision.
Okay. Awesome. All right.
Shane, do you have questions?
Is there an actual fee? And you may have said this, but for the IRS to file again?
Great question, and I like it. So no, there is no additional fee from the IRS, right? So like if you're doing the amendment yourself, then yeah, that would be a no-brainer, right? That would be no cost for to do the amendment. But if you're using a professional to do the amendment, then you have to consider the cost of the professional.
Right. Okay. Awesome. Great. Great. Well, thank you. I appreciate it.
Thank you. Great question.
Well, Ricardo, thank you so much. I just want to close this with an invitation for our audience. We're putting together a cruise to get some training. We as investors don't go on vacation, we just go on business trips. And this is going to be a business trip that Ricardo is going to be joining us, and he's going to be teaching us how to do a write-off after the cruise. So please stay tuned and come with us on the cruise.
Yep, we can show you how to make a business trip, including a cruise, deductible for tax purposes.